with the STRs, the short-term rentals, those used to be substantially more difficult to debt service because there just wasn't enough data out there initially. But again, we've really worked hard with our lenders to get some more friendly approaches, more friendly appraisers as well that have a better and more clear understanding of what short-term rental really means and how to give us the proper numbers. Matter of fact, one of the first deals we did with you guys, their mortgage ended up coming in at $3,500. The short-term rental was at $5,700. We had the very next one was amazing. Actually, we were kind of helping them with a refi situation, and ultimately they were paying somewhere in the neighborhood of 12-13%. We managed to get that all the way down into the 8s, which dropped their payment somewhere in the neighborhood of about $6,000. However, most exciting one, that's the most exciting one to this point, that short-term rental came back at $17,000 a month.
Mm-hmm.
Wow, what a home run.
Yeah.
Oh my God, what a home run. I was so happy for them too. They were salt of the earth folks, definitely enjoyed working with them, and to see something like that hit for them, it really fills the heart, that's for sure.
Yeah, I love that. And I love the personal touch that you give these folks too. And I've heard that time and time again as far as that feedback goes. So you touched on something there, STR lending is getting more and more prevalent. There's so many tools available now to really backfill that data, which, really data drives the STR space. We've got a couple different versions of getting involved in short-term rentals that we've mentioned here on the channel. We'll go ahead and drop the links to those videos. So there's some crazy economic times right now globally. Interest rates kind of going up, which sometimes, but not always, correlates to mortgage rates going up. So obviously there's people asking about that in your space. Why more than ever right now is it critical to have a private lender in your corner? And what do you say to folks that maybe do have some trepidations about rising interest and or rising correlating mortgage rates that are maybe thinking about sitting on the fence versus getting involved? Now, we have obviously sent a lot of folks through you with tremendous results. I know that you've got a huge portfolio aside from that. So you really do have your finger on the pulse across all investment classes. What are you seeing? What are you hearing out there? What can you share with our audience to make them feel more comfortable or less comfortable about what's going on today?
Sure, absolutely. Most of the time when I'm having conversations with any of my clients, really, we just talk about the common sense of where their money sits. Like, for example, I have some folks who have a lot of money in their current house. And to me, as an example to answering your question, I consider that dead money. Is what I call it, because ultimately that money is sitting in your house. It's not doing anything for you. You're literally not making a penny on it. And okay, so let's say you have a 3.5% interest rate. You caught it in the best time you possibly could. It's still dead money sitting in your house. So ultimately, even if you did a refi and cashed out and took, say, a 6.5% interest rate to get that money out of there, or took a HELOC and you're paying, prime +1, it still makes enormous financial sense when you're talking about the kind of numbers that you guys have been able to pull off of some of these properties. Mike, I got to be honest, when I first heard, I was a bit of a skeptic myself because I just couldn't imagine houses like this STRing so well. And I'm a hard believer at this point, man. I've just seen too much of it at this point. So I'm telling my clients on almost a daily basis, look, take the cash that's sitting in your savings account, take the cash that's sitting in your house, put it to work for you. Why? Because, okay, let's say even on an STR, let's say you're going 7-8% interest. The way these things are paying out, it's just so easy to make money on the money that you're pulling out. And then guess what? Here's the thing, and this is the most important part of this conversation. I can always fix an interest rate later. When the interest rates start coming back down and things start to normalize again, and we get back to our spoiled days of seeing those 3 to 4% interest rates, I can fix that later. What I can't fix later is the housing prices. So you have to imagine if you're one of those folks that are saying, oh, I'll wait till next year, or I'll wait till the year after. Well, you have to remember, even in the worst real estate situations, we're still seeing 3 to 5% increases in property values.
Right.
So at 3 to 5%, you wait 1 year, that $800,000 property just cost you 40 grand more.
Yep.
So to me, buy now and take advantage of the increase in the value of property, and then let me fix your interest rate later. In the meantime, you're still going to make plenty of money on these SDRs, or even even your basic. If you just want to do the old school, let me rent it out to a nice family kind of thing, you're still going to make money. So why let it sit there dead?
Yeah, and I subscribe to that also, and the fact that any house you buy today, I mean, barring some act of God, which obviously none of us can control or foresee, we don't have that crystal ball, if you will, but the house is going to be worth more in 5 years than what you pay for it today, right? So what smart money is doing is really getting involved in these houses now with the absolute intent to, when the rates go back down, to refinance, because guess what? As soon as they do that refi, 100% of that savings is going to convert to their net positive cash flow each month. So that's phenomenal. So the deal is going to be good today, and it's going to get better, obviously, over time.
Renters and your property value are going to pay for that house for you. Mm-hmm. To me, sometimes some of these clients, I just go, wow, you really have to stop for a second and realize the opportunity that sits in front of you. I can take care of you from the lending side. There's plenty of opportunity on a property standpoint. Why wait? What are you doing? There's so much money to be made out there right now, even in a dire market. The only clients that are struggling right now are, and if I'm, being completely autonomous, are the middle class and lower right now, because they don't have quite the income to withhold the interest rate issues that are going on from a conventional or an FHA standpoint. You're talking about a very different kind of market. You're talking with lavish and what you guys are doing, because you're talking about people that have disposable income that would have had that income regardless. So these houses are still renting, they're still cashing, they're still making money. And you're in a different echelon of income that allows those to continue to rent well. So it's a very different market.
Yeah, I think that's really astute. We talk about that often as well. And we do really deal and talk often about the luxury, the high-end short-term rental space. And to your point, it is really a different demographic of both investor that's really flocking to that right now. So a lot of smart, big money investors are really flocking to the luxury short-term rental space for that exact reason. Obviously, their investment's going to be collateralized by real estate, and they're tapping into really a demographic of buyer on that booking side that really does have that expendable income, really regardless of what's going on in the economy today. So really astute point, and really can't underscore that enough. That's what differentiates this class, from some of the other kind of lower demographic investment classes in real estate. That being said, though, even on kind of lower end housing or long-term buy and holds, and not related to, the luxury short-term rental space, guys, if you need a private lender, it doesn't matter what asset investment class you guys are looking at. This could be a great fit. If you are interested, you want to have a conversation with Ken and his team, go ahead and email rymak@vipfinancialeducation.com. We'll include that link below. Make sure you put your first, your last name, the best phone number to reach you at, and VIP lending conversation in the subject line. Someone from Ken and his team will get back to you ASAP. Have a quick conversation about your short and long-term goals, and take a look at any properties that you might have to present and see if it's a good fit. As always, guys, go out there and do your own research, due diligence. We're going to continue to bring resources here on the channel when they kind of pass the smell test with us, which is why rymak is here on the channel today. We'll continue to feature them as long as we're getting those phenomenal results like we've been getting. So thanks for joining us on the video. Until next time, take care. Make it a great day.